All right, what is up, everybody? We are back again with another great guest here on the show. Today, joined with Brandon Goss, head of research at Injective. Brandon has been putting out incredible content on the timeline. I have to give you roses there. If you haven't read one of his write ups, you need to go check him out on Twitter right now and read the latest one. There's a lot of information, a lot of value there for a free article written on Twitter, especially if you have interest around the future of tokenized assets and the future of finance on the blockchain. Brandon, so happy to have you here on the show today. I think the first thing first is, maybe a little bit more background about you and what is Injective at the end of the day.
Yeah, no, appreciate you having me on. My name's Brandon, head of research here at Injective. Got into the space probably 2020, maybe 2021. Prior to that, I spent 5.5 years in the defense industry, working DoD. Left that, joined Masari, spent 2.5 years there doing research, then headed over to Injective about a year and a half ago. Putting out all sorts of content covering every different vertical that we're involved in. Um, the quick and dirty on Injective is we're a layer one blockchain built for finance, designed to bring every sort of asset on chain in the most performant environment. So lately, I've been covering a lot in our tokenization, our RWA perps, which I'm sure we'll get into today. But there's a ton more to discuss in the actual, blockchain itself and what we offer for builders and the environment.
Yeah, I mean, before we went live here, I kind of tapped into like the idea that you guys are intertwined in almost every sector of like the future of tokenized assets being part of the new financial world. I'm curious, in your eyes, where do you see us like as an industry on, like, we always use the baseball analogy, like, hey, it's the top of the third inning. Do you think we still are super super early, like, it's the first inning still, or do you think we're at like a matured point where, okay, all the big names have woken up, a lot of people are starting to make their moves, everybody's funneling money in, and like it's way closer to like this all just becoming, the floodgates that have opened?
Yeah, I would say it really depends on how like wide you want to think, right? So I'd say we're still very, very early. But, as time goes on, as industries evolve, everything tries to move quicker and quicker. So you see a lot of big names accelerating as fast as possible, right? Deploying as much capital, launching their own solutions, partnering with other blockchains to make that happen, or building out their own. We've seen a ton of that. And we're only just starting to see large companies come on chain in a real way, right? You saw the thing with Stripe the other week. You see Toyota this week getting involved in blockchain. These are big common names. Like these are, household names, right? For the most part. So I think we're very early, but you do see an aggressive push towards adopting it. But if you think like long term, right? Like consider the general. I drew this comparison the other week. Think about like the general concept of like every company will have an application one day, right? When like that was just coming online, there was some first movers doing it. You didn't think down to like the low level of like, if you spin up a company, basically you're going to have this. If you're involved with anything, I think in the future, maybe, 10, 15 years, you're going to have blockchain support infrastructure in some respect. And if you're dealing with any sort of real world asset, I think you will look to blockchain for several different advantages. The most base case is like increases your operational efficiency in some regard. Therefore, you can improve your bottom line in that sense. I think the most basic case to look at is something like that. And right now, we're just seeing a smattering of different approaches, people throwing money in different directions. But I think meaningfully, like that's still early, right? So long way to go, but I think we're trending very much in the right direction compared to last year. It feels like, oh, are we almost at the final inning here? Are we almost mature? But no, I think we're just finally starting to sort of hit a decent acceleration.
The one area that I've seen, and it feels like this is kind of overlooked, as like an area of like what we should be talking about and educating ourselves as blockchain natives, is like the financial mechanisms and toolings of Wall Street, that now all of a sudden we're like, hey, for us to like expand, we actually need to like be able to tap into what exists and use those things. The number one thing has been ETFs, right? Like everybody's talking about, token ETFs or NFT ETFs. Um, you know, I'm curious in your mind where you see Injective playing their role there from like bridging that gap between, hey, blockchain world meets all the toolings of what Wall Street has offered for decades.
Yeah, that's definitely a large focus for us. I think when it comes down to it, um, it's not always necessarily going to be the largest networks that win. There's tons of room in this space. And when you think about the financial industry, there's a lot of nuance to it, and there's a lot of intricacies that you don't see in terms of just like, hey, general Web 2 like accomplishes all of this, right? I sort of think about like Ethereum as like the internet, right? Like of blockchains, like where like there's everything happening on it, but necessarily like I think about Injective as that's like financial infrastructure, and that's where like finance can really live because the way it's designed, it's purpose built directly for finance. And one of the main ways we do that is offering blockchain modules that are dedicated for specific functions within finance that make it building applications and building basically capability very, very simple and sort of plug and play. We like to call them plug and play modules, right? So think of it like a WordPress for financial application development. And where that comes into play is like take our exchange module for base case. That's an on-chain central limit order book. That's a plug and play solution. If you want to open up any sort of spot or derivative market trading, any application that's built on Injective can go in and directly leverage that rather than building it from scratch, right? Like rather than saying, hey, here's a general purpose L1, you guys, build away.
Right.
We sort of want to raise the bar there, and like let's not everyone doesn't have to come keep building an exchange from scratch or fork someone's code to do it. Ours works, it's actually embedded in the chain, right? So that gives us a lot of performance benefits and like seamless interoperability. Um, Likewise, we also have an RWA module, right? You think about the tokenization space, and a lot of these Wall Street firms are going to want to be putting assets on chain, and they are putting assets on chain in a compliant way, in a controlled way, customizable permissions. That's a blockchain module we have. You can instill custom permissions, allow lists, different sort of compliance mechanisms there to have the security and the customizability you need if you want to put something on chain. But you don't want it to be necessarily like, hey, we're going to do a full private enterprise blockchain. You need to be able to interact with a broader ecosystem. And with Injective coming out with EVM as well, we're obviously built on the Cosmos SDK, but now at the native level we have EVM that connects us to where a lot of industry is looking, which is the Ethereum ecosystem. But that's not limited to just the Ethereum blockchain.
Can you
Long-winded answer, but yeah, basically our
yeah.
infrastructure.
Can you touch on the EVM side? Because I noticed through some of your material from Injective the terminology multi VM being EVM plus RASM or whatever the Cosmos terminology is. I actually don't understand that, and I'm gonna be the guy who like raises his hand and is like, I don't get this. Can you explain that a little bit more? Because I get Ethereum, the unlock there. That's like where a lot of the activity on the blockchain for the financial side is happening, and having that interoperability. But how does that play around with like the Cosmos SDK side?
Yeah, no, I think this is just a battle in crypto in general. Is like you have to lead with so much technical when you're trying to educate someone that it's like, all right, it's a big undertaking. But to trim it down, right, for the base case, yeah. So all Cosmos SDK chains are built on WASM virtual machines, so WebAssembly. That's most of Web 2 is hosted on WebAssembly. And then by connecting to EVM and the multi-VM level, that actually puts us at like sort of we support both of them under one unified implementation, right? Rather than a lot of other implementations might be a roll-up scheme, right? Now, the benefit of that and connecting to EVM is harkening back to those blockchain modules that we mentioned, right? So imagine being able to tap the EVM environment, that huge developer pool, tons of capital to where a lot of people are building, but you can actually use the exchange module. So say you're an EVM application and you want to quickly say, implement a central limit order book infrastructure on your application. You can do that plug and play now by building on Injective with our native EVM, right? So same thing with the other modules. We have a suite of over 12 modules that are focused on finance. That allows you to quickly catch up, right? I mean, we've seen the AMM CLOB sort of differentiation and where it's trending. So I think that'll be a huge unlock for developers. Um, but yeah, it's basically bringing those two environments together and allowing you to leverage the best of both. A lot of people say that, but I think in Injective's case, we have a unique infrastructure that makes building quick and really well suited to the EVM. I think there was another part to your question, but I may have forgotten it. So let me know if
No,
I didn't
I
hit on
mean,
all the
I
points.
think that gets to the general gist of it, which is this is not it's not like a whole new thing. It's just a better compatibility into the modules that you guys have built, and that's the unlock.
Yeah, and it connects the entire IBC ecosystem with the Ethereum ecosystem, right? The ability to build with both rather than, hey, you're either on one or you're on the other, right? Or you're an L2 that settles to Injective, right? But you can build an EVM there and do that. No, this is actually built into the Injective chain itself, but that's why we call it native EVM.
Ah,
And pretty
gotcha.
much the thesis behind that, right, is draw this comparison. Think back 4 years. The entire narrative was scalability, scalability. Like you need a super fast, super cheap chain. Fast forward to today, and you look around, every chain is super fast and super cheap, right? So I would call that like at this point, like table stakes. If you're going to
Yep.
launch a chain, you're going to launch a network. That's just what you have to have. I think if you look 4 years down the line, multi VM is going to be the exact same thing. Every chain is going to have to support multiple different virtual machine environments to be able to connect to the broader blockchain ecosystem and leverage the different needs of your use cases and not be limited to just one environment that might be better at one thing. Like Cosmos is better at like computation, but like Ethereum has access to like this developer base and like a broader ecosystem. Um, you're just going to need to be able to tap into those. And like, it's not just going to be EVM and WASM and SVM. There will be others. There's Move VM. There's other ones coming online, right? So I think go forward in the future, this will kind of be like a ubiquitous feature of pretty much every L1 if you want to compete.
I mean, that's a great point. It felt like the beginning of this year, and not to name any L1s or L2s or L3s, like it felt like that was the differentiator. Everybody's saying like, "Oh, TPS is higher," and I feel like now it's like, oh my god, like especially with Solana and some of these others saying like, okay, we're going to increase, our speed and transactions per second and block size, etc. It's like, okay, okay, what's the differentiator now? And for some of them, it is still that unlock of, okay, we have more developer stakes. But then I look around, and it's like, well, Solana's doing some cool stuff, Base is doing some cool stuff. Then you have like a whole new other L1, like the Objective's doing cool stuff. Everybody has to like be able to piece things together. And I think ultimately that's kind of like the thesis of blockchain is like the unlock of interoperability. No matter where your capital is, you can kind of use it the way you want to use it. Um, it's cool that you guys are building with like where the puck is going, not where it is today.
Yeah, definitely. I mean, I think like it's Ethereum's like too large to ignore in terms of like the talent that's building there and like the access of the ecosystem. But that's not to say like our current ecosystem and developer base is amazing. Like I think the best thing you can do is like, sort of expand accessibility. That's a big sort of a big thing you see across all of crypto, right? Is increase accessibility, whether that's like global access to capital or like access to like build in a certain environment. Like that's kind of a core theme. I think that
Right.
you'll see continue to progress.
I'm curious here, like your view on because you guys aren't technically competitors. I guess in some ways you could be. I don't know. You can explain, but I look at Hyperliquid. What they've done is they've built out a module for spot and perps trading, where anybody can come in and plug and play with that and build out a business on top of it. Do you view that? I mean, you're essentially doing the same thing for a lot of these financial institutions who are like, hey, we want an RWA module to plug into and we can spin this up and now we have an RWA, market. Um, is that a fair comparison? You guys are just doing this at a much broader module offering?
Yeah, definitely. I would consider like, there's tons of similarities there, right? Like Hyperliquid um, has an on-chain central limit order book. They're focused on trading, they're focused on derivatives, as are we. And everyone's excited about the ability for them the plug and play of accessing that tech, right? And Injective's exchange module is much of the same. It's been live for the last 7 years. Um, and people have access to that. What we've done is we've seen the success of that, and we've expanded the module suite, right? Because our focus is being a blockchain built for finance, not just derivatives trading or something very niche in that realm. We want to have like the ability to host that and also bring institutional um, participants online, right? So you need more than just exchange, right? So that's a key advantage where we said, cool, we have an amazing trading engine here that people can tap into. What else might they want to tap into? They might want to tap into the ability to host lending. They might want to tap into the ability to quickly spin up binary options markets. They want to tokenize assets. They want to handle bridging. They want easy access to Oracle for price feeds, right? We have all of that. So we've systematically gone through and built out native blockchain modules for all of those. That's why when you sort of look at building on Injective, it feels like, and what we like to sort of try and communicate is a WordPress for building financial applications. I think it just really raises kind of the floor for where you're starting, rather than like what you typically see across a lot of blockchains, where it's like new L1's launched. Now let's go back to let's go back to the beginning of the game. It's like some point we have to like get past that, and that's how we push progress and push innovation and get to the sort of, I think, the next chapter of blockchain integration with the worldwide economy.
I mean, I see it now. That makes sense. I'm glad you clarified. Because like I think that was one of my first questions when I started diving like deeper and deeper into what you guys were doing at Injective, and was like, okay, I can see there's some like similarities here, but how deep does that cut? And I think also even around and we can get into this in a minute or two, but like how you guys are looking at the token that is out in circulation, and how you were looking at, supply, burn, and buy. And I know the staking is even another area that you guys are exploring. And I was like, oh well, I know this model works. I know people have demand for this. I know it works on the builder side. And if you start doing valuation comps, there's a lot of opportunity here, if you're paying attention.
Yeah,
Yeah.
I won't talk price, obviously. As much as everyone I'm sure listening right now would like me to. No comments there, but as it relates to sort of the tokenomics, I think that's, when I was joining Injective, and when you join any protocol, I think that's one of the main things you look at, right? Like, how does this economy work? Because especially at the blockchain level, that's sort of the heartbeat. Like, if you don't set up proper tokenomics from the start, things become very, very difficult. Injective's done a really good job of that. As of 2024 in January, the supply was fully unlocked. So vesting is all completed there. We have a fully circulating supply. We have a very dynamic and scalable and differentiated burn mechanism to keep that supply in check. Um, and when you take a look at sort of the the way in which block rewards and staking is handled, I think that's all very carefully thought out and engineered. That's why you haven't seen Injective have to do a ton of different changes to the tokenomics, or really any changes at all to the tokenomics from the outset, where a lot of blockchains, as they get more towards maturity, start entering this area where they have to readdress and make adjustments on the fly, and that can quickly spin out of control if you're not really deliberate and really careful. So that's, I think, one of our strongest points is the token economy on Injective, which is essential.
Yeah. Yeah. I in my review and hitting up other people, it came across that not only are the tokenomics good, but also the team's kind of view on the longevity and sustainability of Injective and how they treat the token. And decisions between like held supply, et cetera, is like it's not exit and sail off into the sunset. It is very much, hey, we are building for the next decade, the next 3 decades. Like this is something that we want to really like be ingrained into the financial world for as long as possible, which is refreshing. I think there's a lot of tokenomics and a lot of teams who are like, look, when we unlock and we get the dump on all the VCs, like we're out of here. But that, I mean, some people that I really respect basically coming out and being like, no, like love the Injective guys, love the team, very responsible, thinking for longevity, and you just don't hear that a lot.
Yeah, no, I'm here in our New York office every day, and this team's definitely fully locked in. Our CEO Eric is first in, last out every day. Same with our head of business development, Mirza. These guys are really locked in. They're here for the long haul, and no, this is definitely we're building for decades, and that's proven. I mean, the core team has been around since the very start. Um, and everyone here is supremely focused. So for me, coming into the work environment every day, like that's cemented. I'm glad people on the in the external also recognize that, because like for me it's just so obvious when I'm in here that this isn't like one of those kind of quick plays and then move on to the next project. No, this is the sort of the lifeblood here in the office. So we're grinding.
Yeah, but it's you guys are at the forefront, and I like we said, it's very early. A lot of things are still new. People are looking at stuff. You mentioned in one of your latest articles about how is nobody talking about real estate still on the RWA side. I think it's shocking. It was such a narrative back in 21, 22 about oh my God, what's the next thing to become an NFT? Like, what's the real unlock there? And everybody's screaming real estate, titles and deeds and cars and where like what is going on with real estate? Like, why is nobody talking about this, even though there's some like big moves happening?
I think a couple, there's probably three or four things I think that are influencing that, right? I would say at the base level, you sort of think back to the beginning of crypto, or at least when most people initially get into it, right? They end up in this internet environment where they're trying to learn about how to make maybe extra money on the side. You get into the typical like passive income influencer type situation, or like side hustle. People who are looking for different avenues, different have multiple revenue streams. Like this is a common thing you see online. I think when you're first getting into it, at least back 4 years ago, when people were constantly bringing this up, you're maybe looped in some of those categories. So that's where your head goes. And one of those main categories you'll see um, is real estate. I actually have my own real estate license, not active right now, but so I do know quite a bit about it. So I see the overlap there in terms of like how people approach it and how people think about it. So I think that sort of gets looped in that category, and makes maybe industry professionals or people who truly get to be crypto native and like are entrenched for years, they stop thinking about it so much because they learn so much about crypto and they think it's very differentiated from that, which it is. And then another thing I would attribute that to is this is a lot of global activity, right? This isn't here in the US. Things in the US sort of tend to dominate crypto Twitter. We have obviously, I think, probably the largest like crypto contingent, and we're paying attention to things that are here. But you're seeing tons of different real estate activity, in Dubai, in general, like the entire Middle East. You're seeing things in Germany now, definitely in the APAC region starting to pop up. And you're seeing some things happen in the US. I think there was like a smaller deal that happened in like northern New Jersey, but nothing like big, right? So I think that also contributes to it. On top of that, um, another thing I would think about with sort of the tokenization of real estate is think back to I remember this, like, actually, I always think back to this. I was listening to Nick Carter give a talk one time about the tokenization of assets, and it really like rung true to me, and like I stuck with it about how, and he's brilliant, but he was basically saying the easiest to tokenize, the lowest difficulty assets are going to come on chain, and we're going to move up towards more difficult and difficult assets over time. that obviously you start with stable coins, so fiat, and treasuries, yield bearing stable coins, and then you move up from there. And then on the end of the difficulty spectrum, if you really think about it, that's stocks and real estate, right? Because there's a lot of off-chain components related to enforceability, ownership. You think about real estate, you have like the title, the transfer of ownership, the actual like the deed, and like if you have to change the zoning, there's all these off-chain components that involve like basically like lawyering and dealing with public like governments, right? So it's
Public
super
infrastructure
difficult.
that hasn't been updated in 5 decades.
Yeah, very familiar with that, having worked in the public sector to begin my career. So yeah, they're not ready. um, so I think you bring all those together, right? And you start to think, yeah, real estate is what people, the typical like crypto newbie thinks to, because it's an easy thing to wrap your mind around and gets looped in here. But really, it's super difficult and technical to actually accomplish on chain. So we think it will happen, but it's not going to happen now. And what we're paying attention to now is stablecoins, treasuries, and even stocks now. But right, like those even have their own nuances. It's sort of surprising to see the push, I would say, so early on. If you're viewing it through that lens. But I think now that thesis is kind of starting to break, or we're just reaching that point of the curve moves much faster in terms of timeline.
Right.
Um, so that's
Where where
that's how I
where
look at it.
where are you guys as far as it goes, like it stands with tokenized stocks at Injective? I think the question there kind of comes with, we see Robinhood just had their big announcement, and they're kind of like go to market with, hey, we're doing tokenized stocks that's built on Arbitrum. We see some other ones doing like pre-IPO security access on the blockchain. Where are you guys? Where, like, like, how do you win? Are there just gonna be multiple chains doing like where you can buy the same stock? Like, what? How does this all play out in your eyes as an expert? I would deem at this point.
I guess it's such a new
Yeah.
industry, right? I get that sounds odd to say. Um, I would say so compared to what you're seeing with maybe like a Robinhood or like an X stocks, Injective is definitely differentiated in this respect for bringing these stocks on chain. Um, Injective trades RWA perps, so stock perps, right? So these are perpetual markets that you can trade with up to 25x leverage, right? So for us, we sort of view perpetuals trading as the the premier thing that crypto is involved with, right? This is what people want to do, and for you think about it, it's a lot more capital efficient to have perpetuals on these. You don't have to spin up a SPV, acquire a bunch of the shares, and then mint the digital certificate basically that's linked to those shares so you can trade them on maybe a spot market. It's much more capital efficient to get a price feed from the stock exchange and issue a perpetual market on chain. And that allows you to trade with leverage. It gives you access to what investors right now are really or traders are looking for is sort of the accessibility to sort of the price exposure on those. Now, so it's definitely a different approach. I mean, you look at sort of the global stock market, right? I think latest figure I saw is maybe it's 160 trillion is the total addressable market for that. Where you look at the derivatives market, I just read this crazy number yesterday. Actually, it's like 1 quadrillion total addressable market, right? So it's a lot more. It's a bigger market. It's more scalable. I think in terms of on blockchain, people find this use case, of in favor. But it's definitely a differentiated approach. But it allows us to very quickly, very efficiently provide that the same time, if you look at kind of the conventional approach, I think they still have for the spot and the traditional way of issuing the asset on chain with the digital receipts, they still have that looming thing of enforceability, right? Of the
Right.
actual the the right to vote, the ownership, what it actually means. That entire off-chain component, we've yet to see how that plays out. So I think right now that's one thing there, and you're seeing back and forth on a couple different things there about how traditional firms are looking at that, and how they're talking to maybe the SEC about that. But for us right now, I think perpetuals make sense, and allow us to do a lot.
Yeah, I mean, I think that's been the deeper I dive into like how are people interacting on the blockchain right now. It's clear that perps is like it is the magnet that everybody kind of wants, regardless of if you're into meme coins or if you're into creator tokens or into just getting L1 ecosystem tokens. Like at the end of the day, you're like, oh, well, where is my perps exposure? Like what tokens do I have there? A lot of people, like I mentioned, going to Hyperliquid for that. We're seeing more and more. At this point, the number of decks that have come across my desk over the last 3 months for Hyperliquid competitors with perps and new perp features and new, we're seeing pre-IPO perps, etc. It's just ramping up more and more and more. I do think that that's kind of like just going to become a natural thing that more people who've never touched perps before are going to touch it for the first time uh, over the next 12 months. I just don't like. I had a lawyer who has been in the crypto space for years and years, and I don't think he's ever touched perps. And he texted me the other day. He's like, "How do I use Hyperliquid?" And I was like, "Oh, I don't know if this is a top signal or this is adoption signal, but something's happening here if you're texting me."
Yeah, that's always it's like a binary decision there. Is this top signal or is this good? Depending on what you're getting texted. But recent months have gotten a few texts myself, of similar nature, not necessarily Hyperliquid, but just asking about different crypto, right? Like what is I got a text the other week of like, what do you think about XRP, from a family member, and I was like, I don't know. I think that might be good. I'm not sure at this point.
I have a tweet in the drafts folder right now about XRP from somebody that said something. I don't know if I'm gonna tweet it yet, but there's a lot of signs happening that when XRP starts getting brought up, I start getting a little itchy about where we are in the market. To keep things on topic of what's happening in Injective, I on the topic of like building and letting these institutions come in and build with Injective, I'm curious how you guys look and view your stance as like native builders. So I guess let's relate this back to me, like someone who's building a trading platform, and we have all these people that are using other on-chain, modules and dApps to build out their own businesses and build on features on top of it. Is Injective thinking the same way around kind of giving devs this like tool set of like, hey, if you can imagine it, if you want to offer this to a subset of group users and build your own business on top of Injective, we're going to help you do that.
Yes, definitely. We're constantly expanding the ecosystem, especially now, with the EVM, and helping people build with that. And I think one thing that we've really done a good job on is onboarded some really good DevRels to expand that out, and they're putting out some really good content for builders. And getting the docs in a really good place so people can come on and build in a compliant way. And if you're an institution, if you're a potential developer looking to build an application, there's a lot of hands-on support, from Injective Labs team, to assist you in that and get you up to speed. And then quickly you realize like, hey, a lot of this is here for me to do rather than spend months in development. You can get your application live, and like if you really wanted to, like a day, 2 days. That's sort of the upgrade of our suite, our development tools. So yeah, I think we definitely like see it from that lens of like every blockchain's, hinges on its ecosystem, right? Like
Yeah.
you need users, you need businesses to build there. So sort of offering not only the technical tool set, but also doing things like this, coming on and educating, maybe people that aren't so familiar with Injective about like the capability that exists there. I mean, right now you look at Helix is the largest DEX on Injective, right? I think this year it's done like over, I think almost 19 billion in trading volume, right? It's built on our exchange module. So anyone who's watching this right now, like you can go build a competitor to Helix, very, very fast, because it uses the Injective suite of tech, right? It's,
Yeah. I might go do
from
that
that.
after this call.
Do it, yeah. Let me know how it goes.
But I mean that's the cool thing. I guess the question there becomes like for anybody who's building, it's great for you guys. You get more people building and more users. It then becomes like how big on the dev side can you make a moat of your branding and product differentiators. That then becomes like the real question. Because in my
Yes.
eyes, software is water. It's a liquid. Like everything is. If somebody builds something, I can give me enough time. I can build the same thing. Um, it's a conversation that I've been constantly having around. Well, everybody's building. Like it feels like everybody's kind of building towards the same direction. How do you really define it? I think for Injective, a key differentiator is well, it's the table stakes have been met. The modules is something that a lot of these other competitors or people that are moving towards like RWAs and tokenized stock don't have. Um, but I assume like people continue to like, oh, okay, we're missing this. We got to build it out. That kind of leads me to my next question of like, what is like the in your eyes the future of Injective from where you are today? Because you're at EVM testnet, I believe mainnet is probably not too far off from now. Um, how are you guys looking at the future and offering like new unique things? I know iAssets and some of those other things while I was reading were brought up, but just general question, I guess.
Yeah, no, definitely. I think in terms of moat, like you sort of nailed it, right? From the development side, it's not so trivial to go build a chain with all these different financial primitives actually built into the chain itself, rather than smart contracts on top of it. So that itself is a moat. Being multi-VM, it further anchors in that dev moat. So combine those two, I think that that's really, really bullish for Injective as an ecosystem and as a chain. And looking towards the future, I think you're going to see a ton of institutional adoption come on chain, right? Tokenization, if you look across the narratives, this isn't a couple month narrative that every chain tries to just reactionarily like adopt, right? This is one of the ones that's going to be sticky. You're seeing real capital flow in, and it covers tons of different assets, whether that be stocks, commodities is a really big one right now. It spans so many different things. Um, of FX, anything you can think of, right? Potentially real estate, other ones like different types of lending markets, private credit. All these things are really suited to Injective, given their financial nature, and the narratives there, and the infrastructure exists. So now is sort of the time to bring these people on board, and we've done a great job of that so far, and we're going to continue to do that. So I think you look, 3, 4 years down the line at Injective, you'll see it as sort of a center for people choosing when they evaluate a blockchain, right? It's not just going to be the safety of going to the big one that everyone else is doing. It's going to be the one that actually meets your technical needs, right? I think in a sense, you look at sort of, I guess, to draw a comparison, and it doesn't have as good of a multiple as crypto does, but maybe software as a service, right? There's tons of room for competition there. People choose different options there, but it really about is are the actual services and the features, do they suit your needs? I think when you look at Injective, it suits these needs for across tokenization, sort of global capital markets. I think it'll be a key infrastructure there. So I think you'll have a lot of industry leveraging that tech, whether you know it or not, right? I think at the end of the day, the original vision for blockchain was for no one to know, but it's infrastructure, right? It's like it's financial infrastructure, it's internet infrastructure. So hopefully, I hope one day not everyone's even aware that they're operating on the blockchain.
I mean, that is the beautiful part of technology is that when you're like this early, it is all about the tech, but over time it abstracts away and you just are left with user experience and user interface. And I would assume, I'm not going to say it's 100%, but like it's going to be better than what we previously had. Like that's the beauty of innovation and kind of like always trying to push the market forward. Um, and that's why that's why I love this industry. It's exciting because no matter what you do, blockchain seems to find a way of getting into it. and disrupting the previous infra, which is cool.
Yes. I think like especially too, like in the modern era we're in, where so much trust has been eroded, the transparency of blockchain is super um, reassuring, and I think bullish for the future of the industry, to be able to bring that some of that back in, and then just all the baseline benefits for these companies, right? Even if the one thing you get, or the two things you get out of blockchain, looking 50 years down the line, is transparency. Um, and increased operational efficiency through like quicker settlement times, cheaper operations, the ability to transfer money very easily. That in of itself is incredible, right? But I think that'll just be a sliver of what blockchain has to offer.
Yeah. Yeah, no, it's exciting. I think, and as I mentioned earlier, the merge between the worlds is super fascinating. 2 days ago, on the 25th of August, you guys tweeted out that the SEC had opened up comment on the ETF for Injective from Canary Capital. For those who aren't familiar with that whole situation and where you guys are at in that process, can you maybe explain high level and then what that means for, I guess, the future of Injective?
Yeah, as it relates to the ETF, I'm not Canary Capital, but I can talk about sort of like what's different about like in my reading of it. The injective ETF, I think in general for staking ETFs in general, or like overall, what's very interesting as opposed to your typical ETF, which typical ETF is just designed to track the price of certain things, right? You don't actually need to hold injective to get exposure to injective. What's really interesting about a staking ETF would be the fact that that INJ they have would then be staked, and those rewards that are earned from securing the network are then reinvested back into the ETF, which allows you to compound the rewards, right? So it's kind of a new take, right, on maybe an ETF, maybe something you haven't seen before, with the reinvesting of staking rewards. So I thought that was one thing that's very interesting. As it relates to where it is in the process, I'm not an expert on that stuff. I'm not going to pretend to be. Um,
Fair.
yeah, but I think that that's one thing to pay attention to, right? That's just one of the innovations that have been offered. And I sort of think about too, like the ETF conversation in general, right? There's this push and pull with like crypto and TradFi, to where it's not just like, hey, TradFi is going to come onto the blockchain. It's we're going to integrate. So there's a push and pull, right? Like you give off-chain exposure through ETFs, and TradFi can have that. Then they bring some of their operations on, and slowly we like do the push and pull until it's closer and fully integrated at that point, and then it's one and the same.
Yeah, the staking side, I think, is the most interesting part of around the token for me right now. Obviously, you can't talk. I don't know where, like, you can't talk price, but around the token, I think there's there are areas that get me excited from like a this is not just hold a token and hope price goes up. There are actual mechanics at work that are putting pressure on the price as the ecosystem gets more adoption, and you're getting incentivized for holding the token and securing the network. Uh,
Yeah.
yeah,
One thing that's I mean, a good point you bring up about staking, I think an important thing to understand, right? So the way Injective handles it, is right now, I think you take a look at Injective Hub, I think there's about 55 or 56 million Injective staked. The total supply of Injective is 100 million, so that's over 50% of the supply is locked into staking and securing the network, right? Um, and the way that the actual protocol handles it is every single block it's checking for a targeted percent staked on the network, right? It wants to target that. So it'll either throttle up or throttle down block rewards as a way to drive towards that goal of percent staked on the network, right? So if, say, and we don't hope this happens, right? But say $5 million, 5 million INJ gets unstaked, right? So then you move back down to 50% staked. Block rewards would then increase, which encourages people. Oh, now there's higher rewards for staking. I'm going to stake, right? So you can get closer back to your percent staked goal. Same way as if, say, a 70 million, 70% is staked. Block rewards go down, which people say, "Oh, okay, I'm going to unstake. There's lower block rewards. That increases the amount of liquidity in the ecosystem. So every single block that's happening within a differing bounds of, right, of upper and lower, to sort of maintain that level of security that the chain needs. And at the same time, for injective tokenomics, that's following a decreasing schedule. So those bounds are going to get tighter and tighter over time. That's covered in INJ 3.0 tokenomics upgrade, if anyone wants to read about that. So over time, that'll get slower and slower. And what's unique about injective in concert to that is the burn mechanism, right? We call this the burn auction. So basically, think about it this way, right? Like you think of Ethereum EIP 1559, they basically burn a set amount of transaction fees, or on Solana, it's driven by transaction fees. The more transaction fees, the more that gets burned, right? But you think about the scalability of that, you basically rely on network congestion to control the supply so inflation doesn't go crazy. On Injective, a portion of ecosystem generated revenue, so protocol generated revenue from dApps that are built on Injective, is collected every single week into a basket, right? So you might have, say, 100K of USDT open for public auction. Anyone can come in and bid on that, right? So it's an English auction that runs, and when that's completed, the highest bidder receives that basket of 100K USDT in exchange for their bid in INJ, whether that's 100K, 90K, 80K, whatever it happens to come out through the auction. They receive that, and in exchange, they give their INJ. That INJ is then burned, right? So that
Oh, it's just
allows
burnt. It's not like held supply back to the foundation. It is just straight burn.
just straight burned, right? So the ecosystem participant has the opportunity to, bid and win those fees, but whatever's collected from it is burned and permanently removed from the supply. Now, how that differs is we're able to keep transaction fees very, very low. Subset, like point, I think the last median transaction was like 0.0003 dollars, right? So super small. We're able to keep those transaction fees low and our revenue is still high, right? So that gives you some horizontal scalability with your ecosystem. The more helixes of the world that come onto Injective, the higher your revenue goes, the more you burn, which gives a very, very nice setup for sustainability and long-term, um, you know, viability as a blockchain, as opposed to just relying on a very congested network to hopefully burn more.
Right.
I hope
Is
that,
and I
yeah.
feel like I assume their model is they're taking fees, but their fees aren't off of your network. Like they're because the fees are so small, their fees are just like baked into every transaction.
Yeah, this is so primarily there's multiple different locations that this revenue is collected from protocols on Injective, but the largest one is definitely from those applications that are leveraging the exchange module, right? So if you want to go
Yeah.
on and trade, a portion of those trading fees are collected and put towards this, right, in exchange for leveraging that tech on Injective. But yes, the actual transaction fees, like the gas costs, are still super, super low. So that's a way to maintain a nice user experience, while if the particular platform you're using, every single protocol charges its own fees anyway,
Right.
right? So that's not differentiated.
Hmm. Uh, I just had this interesting idea kind of like popping in my mind around like how Injective is measuring their, your performance, your adoption, and it's a very competitive vertical because everybody's gunning to be like the financial blockchain and like, hey, trade here, and like we want to do as many transactions as possible. What is like your North Star KPI in Injective? Is it number of transactions per day? Is it number of daily active users? Like what are you guys measuring success against?
Yeah, well, I wouldn't say that's just there's just one KPI, right? I think that would be short-sighted as a company, but like one we certainly look to is revenue, right? Because of everything I just described, it's so pivotal to the actual on-chain economy. I think if you take a look right now at chain level revenue, Injective's in the top 10, right? Like up there competing with networks that are of more massive size in terms of maybe market cap. It's a top 10 revenue generating chain. At the same time, if you look at of the tokens that have the most circulating supply, like their full token supply is circulating, um, our staking rewards are very, very competitive there, right? So that provides a great incentive to get more security for the network. But revenue definitely is a big one that I like to focus on. I often, you'll probably see on my channel, I put out like revenue to FDV multiples, right? So a way to compare revenue amongst differing size chains, right? So the way that you know efficiently can convert activity into revenue, I think, is super important. I think a lot of people have been paying attention more and more to revenue this year.
Yeah, I mean, this it's been a question I've asked on a couple different streams of like, is the like in revenue meta played out, or is it just getting started? And honestly, I thought it would be a very like one sided answer. It's been pretty split, where people are like, yeah, like revenue's cool, but like we need to get back to like the points and like to tokens, and like some people are like, no, like this is a business, like revenue has to be there. I'm I'm very of the like revenue side, so it's good to hear that you guys are like focused on that. Um, but it's definitely an argument. It's definitely an argument.
Yeah, I think those arguments arise from maybe like blockchain purist approach, right? Like of like,
Sure.
yes, of course, like all that, like sort of like thinking back to that, but like at the end of the day, these are businesses and we are trending in the direction of mass adoption to where like the global economy is going to be built on these. And if you go ask Wall Street, does revenue matter? You go ask any sort of small company, does revenue matter? Like, yeah, that's one of the main things. It's a
Yeah.
very, very important. At the same time, you need to be operating efficiently, right? So it's not a one size fits all. I get where other people are coming from, but I think if you have a long term vision of the industry and what you're building, it's certainly important.
Yeah. It's it kind of plays into the whole topic around you guys have a fully circulating supply. There are no points meta that you guys are dangling in front of people. There is no token airdrop incentivized TVL and like, volume incentive there. So everything you kind of see happening on Injective is I would say without I don't want to say with 100% because I don't know if I'm wrong here, but like it is almost certainly all natural, organic volume happening without like people trying to farm what's happening on Injective.
Yeah, definitely. I think that's important. Like Injective is a mature chain. It's been through several bear markets and done very, very well in terms of continuing to build and issue new tech and advance. So yes, yeah, definitely. There's none of that happening on Injective, which I think is great and very important for institutions that might be looking to leverage this technology. Sometimes you get caught up in shiny new object, but if you're going to bring billions on chain, you need something that is been operating a long time, is very mature, has had no vulnerabilities, um, and been doing it for a while, and not subject to any of those sort of games.
Yeah, Mike Dudas went on a rant maybe a few weeks ago about why nobody's choosing Solana for, or no, maybe it might not have been Mike. It might have been one of the um, Bankless guys. Was I can't remember who it was now, but basically saying like institutions care. How long has your blockchain been up? Like, was the downtime? And 4 years and knowing like, maybe 2 years ago there was some downtime is enough to scare off multi-billion dollar, trillion dollar institutions who are like, yeah, we are not going to jeopardize 50 years of us navigating the financial space and make one slip up because we chose the wrong blockchain or we chose the wrong technical partners. Like we want to see that there's like I can go to bed at night and not worry about my customers or my clients not being able to get to their money or numbers getting mixed up or having an issue or anything getting lost. That matters so much, and I think it's kind of lost on the natural consumer on how important it is to have been around for, like you said, 7 years and knowing the do's and don'ts and not having any downtime.
Yeah, definitely. I didn't see that, but
I'll find it.
Solana.
I'll find it.
So Solana's obviously a phenomenal business in blockchain, but just more broadly speaking about the topic, I mean, I think a lot of these people who have been in the financial industry 20, 30, 40 years, like they don't want to go back to the days of stressing over like their
Yeah.
network administrator, right? Making sure that's all. That's why I think like a lot of times like you see people, businesses that are moving towards cloud-based solutions, right? Or like a AWS, right? They have more security there. It might be more expensive for them to use that business, but they value the security rather than maintaining their own, which they previously did. And I don't think they have fond memories of maybe when that was. I wasn't around then, right? But if you go back and say like, all right, well now let's introduce maybe something that has a similar vibe, this piece of network infrastructure that's maybe outside of our control or we're worried about. Yeah, it's definitely a factor that maybe everyone's not aware of.
Right, right. I am being told that it was a bankless person that I was tweeting about with this, not Mike. So also, yeah, we love Solana. I think this idea of like one being bad or one better than the other, I think it's there's pros and cons to everybody. So no shade being thrown. I gotta make sure I'm not making any enemies. Um,
Not trying to make headlines.
no headlines here. This is not a headline show. This is we're keeping everybody is part of the blockchain space. Yeah, I oh man, I'm excited off of this chat because I feel like there's a lot that's in the works. Where do you see RWAs by the end of the year? I'm curious in your eyes, like how things change, specifically in that space.
Definitely. I think three things probably happen by the end of the year. I've been tracking stocks now with my weekly newsletter. Go check it out on my Twitter for 8 weeks now, 7, 8 weeks. And the metrics are back and forth, right? It's not as accelerated as you would expect. But what I do think will happen by the end of the year is I think you'll have definitive regulatory clarity. There's a lot of talk going on right now. It's almost impossible to keep up with. I'm just waiting for final decision on like what they're gonna say about actual like tokenized securities on a blockchain. So I think you'll have a clearer vision of that. I think that trading these stocks on chain as perps is going to explode. I think you're already starting to see that. I think BitGet this week or last week did the RWA indices as perpetuals. They just announced that, and there's other perpetual markets that are spinning up for tokenized stocks. I think with Injective, already doing 1.7 billion in those that market there is proven out like people want access to this, and you're going to see a ton of competition move into the space, and that become a very large narrative emerge. And then I think volumes or like the amount minted on chain will increase, but it won't be as much as we want, right? The amount like I'm seeing weeks where I just go off RWA.xyz for a lot of this data, right? But there's weeks where nothing new is minted on chain, and there's weeks where a ton is, right? And it floats back and forth between the valuation, but like the big increase already happened. I don't know if we're going to get one that sizable with the announcement of X stocks. I think in June, that's when you
Yeah.
saw a huge amount drive on there. But I don't know if we'll push too aggressively past then. But if regulatory clarity comes sooner, perhaps. But what you're seeing right now in the on-chain stock world and tokenization in general is a lot of experimentation, and I think you're going to continue to see that. But overall, I think this continues. I think we keep accelerating. I think big names keep coming in. Right, I mentioned um, Toyota came in this week. You'll continue to see big names like Stripe. You're going to keep seeing more and more of that. And then, I think another one, we got the Figure IPO coming up. I wrote about that this week
Yep.
on Chain HELOC provider. I think that'll make some news. I think you'll see more of that, people following that blueprint. But yeah, I think it's a steady climb here on out in terms of on-chain value.
I love it. I absolutely love it. I'm fired up. I'm excited for what Injective is doing. I'm excited to keep reading the articles you put out on a weekly basis about what is happening at Injective. in the RWA space and the tokenized security space. If you're listening and you haven't already, make sure you're following Brandon on Twitter at 0xbrands. And you can also make sure you're following Injective at Injective on Twitter to see what they are doing with their L1. Brandon, I can't thank you enough for the time today, hopping on, chatting through everything. Super, super educational. And we're gonna have to keep you close by, and we'll have you back on the show as I think things accelerate in the Injective and the RWA space over the next 6 months.
Yeah, thank you so much for having me. It was a lot of fun, and definitely happy to come on whenever. And for anyone listening out there, definitely check us out on Twitter. Go to injective.com, go to Injective Twitter at Injective, find out what we're doing. I'll continue to be publishing stuff week in and week out. So be sure to pay attention.
I love it. Thank you, everybody, for tuning in to another